October COVID supply chain dive. As the third quarter burns by and fall approaches, COVID is still ravaging many parts of the world, with high infection rates still occurring daily throughout much of North America. Over the last months, freight markets have changed in many ways, highlighting the volatility of the overall supply and demand-based market economy that is the spot market. Supply chain managers and logistics providers have worked overtime to maintain as smooth as possible operations for their companies and clients. Here we take a look at recent supply chain changes, ongoing challenges, and forward outlook. Freight market outlook. In a drastic contrast to our previous freight market COVID supply chain dive, the supply-demand economics of the freight market have shifted in the opposite direction, with rates and volumes up significantly since April of 2020. While not all lanes have experienced this volume jump, in many markets such as California, Texas, Florida, rates have skyrocketed with more loads needed to be moved than trucks are currently available. Factors creating this volume bump include many overseas factories having resumed production, ocean carriers offering more standard service, and perhaps most importantly, consumer demand rising significantly. Many supply chains, particularly small and medium-sized businesses that were enjoying the low rates of late 2019 and the even lower rates during the second quarter of 2020, are struggling with the rising cost of transportation services as of mid to late August. As always, the market is highly volatile and will tilt the other way again. But the safer bet is that while volumes might not rise for a peak season as much as they normally would, that you should expect prices to remain around where they currently are for the remainder of 2020. Many trucking carriers were hit hard by the drop in rates and volume during the second quarter, and as a result, capacity in the market has dropped, with many carriers getting a lifeline in the form of PPP. Whether this capacity increases or not has yet to be seen. Intermodal has once again started playing the role of a safety valve for rates and capacity on many lanes both domestically and on cross-border Mexico shipping lanes. While overall rail carload freight has dropped in volume, as did Intermodal by around 20% on a year-over-year basis, Intermodal in the last several weeks has risen above 2019 levels. Again, highlighting the importance of mode diversification and capacity in a rising freight market. Particularly for long-haul cross-country freight, intermodal rates represent a significant savings. We've seen up to around 25% as compared with over-the-road trucking cost. This adds up for shippers moving multiple loads per week or even dozens per day, and can affect the overall bottom line for many firms as transportation represents on average around 8 to 12% of the total purchase price of any physical item. Intermodal is now extremely competitive and is representing massive savings for many shippers in tight markets across North America. Industrial output and consumer confidence. Many factories have resumed at least some kind of operations following the shutdown that was so widespread throughout much of April, May, and June. This has put supply chains back into motion even on a lessened volume and capacity. Still, however, many factories are operating at a less than normal capacity, which is creating part shortages and sometimes sub-assembly shortages. Ford and Toyota both being examples of companies that have products in demand, but lack the part inventories to run their assembly lines at full capacity. Particularly for the automotive industry that relies on literally thousands of second and third tier suppliers, consumer demand has returned to the point of outpacing overall production capability. While a frustrating situation, any rise in consumer demand is welcomed. Consumer spending and confidence rose following the early part of the shutdown, according to the Department of Commerce. However, some firms such as Walmart and others have seen a decline in sales volume following the depletion of the stimulus package and PPP. It's still too early to tell how the rest of the third quarter will be. One outlook would be a steady and slow rise in consumer spending and confidence as the economy reopens, unemployment claims drop, and demand reemerges. But another picture could be more stark, yet more accurate. This second outlook hints that while the economy might not experience the pain that it did during April and May, at the same time it won't reemerge to its January levels for some time, particularly as COVID outbreaks continue and perhaps more importantly, PPP has run out. Without a doubt, many businesses were only able to retain employees and stay open due to the stimulus package. An entirely new question would be if there will be a second stimulus package passed in the short term. What all of this means for supply chain planners is that there isn't a clear basis to make financial decisions such as capital spend, long-term hiring, and expansion goals. Longer-term questions. Many long-term questions remain as to how companies will be preparing for future supply chain disruptions. No doubt nearly every company will review this past year as a guide to building a playbook for future emergency procedures. But one common theme we've heard is the preference to nearshore and rely less and less solely on China. While China will remain one of, if not the top source of imported goods for many US firms, Other companies are also wanting to build relationships with factories in other countries. Mexico, in particular, has been the focus on many companies looking to nearshore. About Zmodal. Zmodal provides comprehensive supply chain solutions that are data-based and focus on optimizing your supply chain logistics plan for better reliability and efficiency. We focus on a multimodal approach to building resiliency that is backed by a first-class team that provides 24/7 support and the technology you need to keep your supply chain connected and visible. Our technology provides shippers easy access to convert over-the-road freight to Intermodal. If you would like more information or want a completely free demo or initial consultation, give us a shout. More videos coming along from Zmodal very soon.